coming from none other than the RBI Governor. Speaking exclusively to CNBC TV18, Shaktikanta has said that GDP numbers are much worse than expected. He further said that no one was prepared for 5% growth and that this number came in as a big surprise for the central bank, whose growth forecast of 5.8% was way off. India's GDP growth of 5% is the worst it has experienced in the past 6 years. It is much lower than 8% growth in the same quarter last fiscal.
You know, the government borrowing has gone this year in a non-disruptive manner, and what view we will take, what space we have, that will depend on the incoming data with regard to growth, with regard to inflation. And the government, I think, so far as growth is concerned, I'm slightly digressing, sure, but so far as growth is concerned, so far as revival of certain sectors where growth momentum has slowed down, I think government they have come out with 3 doses of announcements. So similarly, I would believe that government is fully aware of these fiscal challenges. You know, the government borrowing has gone this year in a non-disruptive manner, and what view we will take, what space we have, that will depend on the incoming data with regard to growth, with regard to inflation. And the government, I think, so far as growth is concerned, I'm slightly digressing, sure, but so far as growth is concerned, so far as revival of certain sectors where growth momentum has slowed down, I think government they have come out with 3 doses of announcements. So similarly, I would believe that government is fully aware of these fiscal challenges.
That was RBI's Governor Shaktikanta speaking to Lata Venkatesh, who will be joining us in just a bit. Confidence in the Indian economy is giving way to uncertainty as growth in the labour-intensive manufacturing sector has come to a near standstill, breaking to 0.6% in the last quarter from 12.1% in the same period a year earlier. Lata Venkatesh is the one who's done that interview for us. Lata, it seems that the RBI Governor himself is surprised that the growth was as low as 5%. Why were they not expecting it?
Oh, well, actually, in the policy before the GDP numbers were announced, they did lower their expectations earlier from about 6% in the first quarter to about 5.8. No, I think the earlier expectation was 6.5. They lowered it to 5.8. To be fair to them, even the street expectations we had at that time was 5.6, 5.7. Nobody in the street expected 5. So it was a rude shock to the economy, to markets, as well to the Reserve Bank. That was one of the talking points. I wouldn't say the Reserve Bank Governor gave away too much more than that, except that he was shocked by that number, because their estimate for the full year is still sitting at 6.9. On the street, very few people are expecting even 6. Most people think for the full year, because you have such a low first quarter number and there is no sign of any recovery in the second quarter, how much can you make up in the third and fourth? People are expecting things, you know, there's low interest rates, all this to start accumulating and putting up a positive pressure, maybe only by next year. That is starting April 2020. So on the street, you will hear expectations that this year we will grow by 5.7, 5.8. The governor, I could not persuade him to give me a new number. But clearly, in the coming policy on October 4th, we will hear a new number from RBI. It must be as low as 6.5 at least, if not even lower.
So, Lata, how did we get to this point? Is it just manufacturing that has dropped like a rock? Or, you know, or is it something else? Or is it a combination of multiple things?
A combination of multiple things is absolutely correct. You know, there was an overproduction in the automobile sector that took away a bit of, that excess capacity or excess production stayed on. And then the big talking point is also the NBFC sector that lost all trust after the IL&FS default. With people not giving them money, they are not able to provide more loans. So that, liquidity mismatch or tightness was another reason why we saw an impact on growth. And the global backdrop is pretty dull. You know, we got the trade numbers for August last week on Friday, and exports have fallen by 6%. Imports have fallen by 13%. If you only took industrial imports, you took away gold and you took away fuel, if you only took industrial imports, that has fallen by 12%, which means our ability to absorb industrial goods, machine tools, transport equipment, metals, chemicals, all that is less, which means we're absorbing less. So it is across the board. There is also a global slowdown. We are not able to sell much to our destination countries, are not doing too well. All that is hurting, and then we have our traditional problems. When companies are plugging out of China, we are not the first port of call. It's Vietnam, it's Philippines, it's Malaysia, it's Indonesia. So, the ease of doing business still has a distance to go. There is the global backdrop, there is the NBFC problem, there is the auto slowdown because of overproduction. And yes, we have shot ourselves in the leg in the past. GST implementation was not the best of technology. And before that, demonetization already hurt the economy rather seriously. It's a coming together of many things.
It's a coming together of many things. And you're pointing out that the next quarter is not looking very good either. Lata, what happens to the string of announcements that have been made by the government and the finance ministry? Is that not giving the markets any confidence?
Well, I wouldn't say next quarter. I cannot foresee or predict, but the current quarter, which is what you call next quarter, because Q1 numbers are with us. Q2 is what is underway. And here we already have numbers that look very dismal. So when we get the numbers for this quarter, we'll get it only sometime in November. At that time, the GDP will still read 5 point something, maybe 5.2 or 3, because it still looks pretty dismal. Next quarter, there is a bit of expectation of festival season. But, you must remember, GDP is always a comparison with the previous year, same quarter. And the previous year, same quarter, the third quarter was not very robust. So in comparison, our next quarter, October, November, December quarter may not look so bad. But that's largely because of the base. You may tick up to 6%, not because the economy in the third quarter is better than in the second quarter, but because you're comparing it to a year ago quarter. Most people on the street are not expecting a genuine uptick in growth till perhaps next year, and they are banking on this. They're banking on that lower cost of money. A truck owner, a fleet owner doesn't buy a truck simply because the interest rate is 0.5% lower or 1% lower. He buys a truck when he sees business. And that will, it's kind of a chicken and egg situation. You would not want to buy a car because you're not sure whether you will get an increment. Indeed, in some industries, whether you will even keep your job. And if you don't buy that car, the auto industry is losing some jobs. So in a way, it's a chicken and egg situation. By the time all these steps take hold, well, it could well take a year is the expectation. Not a year, maybe at least 2 quarters is the expectation now. The general feeling in the economy is that what the government is announcing is not enough.
Lata, we'll leave it there for the moment. Always good to get you on the show. Always good to get your perspective. Thank you very much. Lata's interview is going up on our website, news18.com as well. A dire